Hello, everyone, and welcome back to an RMA Town Hall. This is our third
Hello.
one. And today, we thought we had it all figured out yesterday. And as we were at the house kind of resting and recovering, we got information about brand new rules that have come out. And if you guys saw our email, which I'm sure most of you did, you know that there have been quite a few changes to what we talked about yesterday. And so the whole point of today is to talk about that, the changes that have taken place. And so, my first comment there is, the only thing that is certain here lately is uncertainty. And that's exactly what we have going on with this program. There's just constant change. If you think about it, it actually was signed into law actually a week ago today. It wasn't actually signed into law until the evening last Friday. So it's only been 7 days. So the idea that you could roll out a $350 billion program in a week was probably pretty aggressive, and the government, as usual, was not prepared. So the changes that last night, we're going to run through the most significant changes, and then we'll answer your questions. So to start with, the document that is the most important one, and we sent you a link that shows you all the new documents that are on the Treasury's website. And the final document there that's the most important one is called the Interim Final Rule, which you got to love, IFR. Interim Final Rule. I think that's an oxymoron. If something's final, I'm not sure how it is interim. So again, classic governmental terminology there for you. But the thing I want to bring that to your attention, because there were several documents that are all updated, but they did not do a very good job of updating all the documents. So the IFR is the most important document. They didn't change some things in the application. They didn't change some things they should have changed in the borrower fact sheet. So I'm going to focus mostly on the IFR as I look through these changes. So as I kind of roll through, the single biggest change that we think is the single biggest change is how independent contractors are to be handled. We did all the initial applications, and we treated independent contractors just like employees because that's what the rule said to do. The government realized that there could be some double dipping there, if you will, if an employer used that contractor as like an employee and used them in their loan calculation. It did not prevent that individual contractor providers from going to get their own PPP loan. So the government decided that employers cannot use the independent contractors. The independent contractors will have to get their own PPP. So, and that, again, I referenced the IFR. It's on page 11, item H. Again, it's still on the fact sheet, and it's also on the application that you can put your contractors in there, but you cannot.
Well, and Randy,
go ahead.
Can you hear me?
Yeah.
If you think about it, those people individually probably would not go in and get a loan on their own, because if you only have $20,000, $30,000, $40,000 worth of wages, it's worthwhile. So it calls down the number of dollars in those employers that were pulling that up to spread the wealth a little further, I believe.
Yeah, I agree. It's going to be an interesting situation. We've talked with some clients already today where the issues are going to be. They have an independent contractor who has been their independent contractor for a while and is going to continue working for them. Imagine a plumbing contractor who works for a large plumbing company, but on a contract basis, he's going to continue to work and get paid and go get a loan, yet the employer, if you will, or the company is going to continue to pay the gentleman for working. So interesting situation there. And the flip side would work as well if you had for example, a hair salon that because their stylist can't work, they're not going to get paid at all. So it makes sense in that situation. So it's going to be very interesting as to how different companies handle that. Somehow I advanced a slide. I didn't mean to. Let me see if I can fix that.
Well, again, one of the keys is that even though they changed the rule, in the instructions, it still says to use, include contractors or 1099 people. So that is definitely a misprint. I've had a number of calls on that today as well, and argued with an attorney for a while about it. Unfortunately, at times what happens is we all end up as the cleanup crew following the parade. These guys are trying to get this money out as fast as possible, and they really aren't as diligent as they could be cleaning up all of the dots, dotting the I's, crossing the T's.
Exactly. So moving on, the next biggest or the next change, we've got 10 changes here to talk about with you. The next one is, as you probably have noticed, there's a brand new application form. It's quite similar to the previous application form. It's just 2 pages. It only has room for 1 signature versus 2. It has a spot for you to indicate the type of entity that you are. It changes one of the questions they had asked before was asked to how many jobs you had. This time they ask you how many employees you have. So that is one of the other big changes is the form itself. It's not significant, but it is obviously a change. Tom, you want to add something?
Yeah, I do. So they've gone from jobs to employees, but on the back end, during the measurement period and how they're going to be utilizing the number of employees in 2020 to compared to 2019, they use full-time equivalents. So they've said employees, first it was jobs, then it's employees. I think that it should be FTEs, full-time equivalents, because that's what it is going to be measured on the back end. I'm sure there are some people that differ, but I sure don't want to be caught with 15 or 16 part-time employees and put those jobs up and then have to explain how my FTEs didn't change by that much on the back end.
Yeah, there's something, again, there's several things. That's one of several things that has not been clarified. We'll talk about a few others. The IFR did mention that there will be more changes to come. And also the IFR itself actually has requested comments from the practitioners, if you will, out there as to what clarifications they would like to see. So my guess is there will be a lot of people like us commenting on the IFR, and that you can expect some additional changes that will hopefully be a positive, be a clarification. Number 3 is that the interest rate has changed. We've gone from 4% to 0.5% to 1%. That's not a huge change, obviously, but they did move to 1%. The only thing that's really relevant there is to remember that once you get your PPP loan, interest begins accruing immediately, and so it'll be accruing at 1% until such time as you begin applying for forgiveness on that loan. And again, that loan is deferred and no payments required for the first 6 months. The next item, number 4, the IFR spent a good bit of time assuring the banks that they are sort of off the hook, if you will, or that they have a very low level of responsibility for verification of the data that you're going to submit or we're going to submit to the banks. My understanding and our understanding from people we've been talking to all week is that the banks have been pretty scared of this thing. The rules weren't very clear. They gave them no real definitive documentation that was required. And so the bank was very concerned that the government was going to come back on them and hold them liable in the event that someone turned in fraudulent information or the information was an error or a fraud. And so the IFR really gave the banks, in a sense, a hold harmless assurance that they are not going to be held responsible for the fact that a company certifies they've got X dollars of payroll. In the event they somehow manufactured that data or they didn't really have that data, the bank is going to basically be given a pass on having any responsibility for that. The government's not going to hold them responsible. So that's a pretty important thing. And from what I've heard, again, even just today, some of the banks still aren't happy with what's in the IFR now. So they may get some further clarification on that. Moving on to
one of the things, Randy, one of the interesting things is within the IFR that we're talking about, they specified that the banks have they have the ability to deal with their customers, meaning they don't have to get as much documentation from people that they know that have payroll or what have you, and the banks are going crazy on the amount of documentation they want, but they've kind of stratified it into customers you know versus customers you don't know so well versus customers you don't know. So that is one of the reasons why some banks are asking for more and some are asking for less information.
And what I've got here next on this slide, this is number 4, continued. I just thought it would be helpful, and this is right from the IFR, page 21, section HII. But this is all that the government is asking the banks to confirm. And I've taken this pretty much verbatim out of the IFR. And if your bank gives you any grief, you could go to this section of the IFR and say, hey, my understanding from the law is that all you're required to do is to confirm the certifications that I'm making to you in the application. You're to confirm that the receipt of information that proves that I've paid salaries and taxes on or around February 15th of 2020. And you're to confirm the dollar amount of my average payroll for the preceding calendar year by simply looking at my payroll documentation. And so our belief over here as accountants and CPAs is that obviously if you certify, they just have to confirm that you initialed it, and they can do that electronically now. They have to confirm that you had employees and paid taxes. That can be shown from a ADP or a payroll report or a bank statement. If it's for the calendar year, from the calendar year 2019, it's from your W-2s or your W-3s that you filed. And then that you could simply take the W-3 information from 2019, divide by 12 times 2.5. If that is close to your number that you're asking for on your loan, I would think that the bank could say they've confirmed that dollar average monthly payroll is a reasonable number from the borrower. So those are the only things the bank is required to do. The next item, number 5, just confirmed what we've been saying all along, is that it's a first come, first served program. There's $350 billion allocated, and that $350 billion is going to go to the first people that get in line and get their applications sent in and approved. So obviously, as we've been talking, it makes it so important to make sure you have your ducks in a row and your application ready, and have a conversation with your bankers as to exactly what else, if anything, they want from you, so that as soon as they open up the lines, so to speak, which is item number 6, initially the first submission date was today. They didn't change that in the borrower's fax, by the way, but it's not happening today. I've talked to 2 or 3 bankers this morning, and I've been told probably it'll be Tuesday before they begin even having the ability to submit the applications to the SBA or to the government. You may notice in the links that we sent you, there's a borrower application. There's also a lender application. And so your application is going to be sent to your banker, and your banker is going to file an application for you electronically. And you can see that application that the lenders have if you go to that link we sent you on the Treasury's website. So best guess, again, this is not, we don't know this yet. We may get clarification today or tonight, but most likely Tuesday of next week, you'll be able to submit your loan application. The next interesting thing is number 7, which comes from the IFR on page 13. The loan forgiveness amount can actually be used for principal and accrued interest on your loan. That was not mentioned previously. In fact, previously it had said the maximum forgiveness was the principal of the loan. What the IFRs come out and said is that if you've got accrued interest, again, that interest begins accruing the day you get your loan. So 8 weeks in, there'll be some number of accrued interest. If your expenses in that 8-week period exceed the principal and the interest, and they're all forgivable, then you would not owe anything at all on that loan. Item number 8 talks about confirms. It is confirmed again that e-signatures and e-consents can be used. Initially, our bank had told us they would have to have a signed original document before they could fund the loan. I think they told us that on Tuesday, and then on Wednesday they were telling us, no, we just heard it hadn't been official, but we've been told we can take e-filed or e-signed documents, and so that's been confirmed in the IFR. Tom, you have something?
Yeah, I mean, first they said they needed an inked original. Then they said, oh, go ahead and email them over, and yeah, you can e-sign it as well. So that's the way this whole week has gone.
Exactly. The other thing I mentioned in number 9, they did really not give us any help on some of the forgiveness calculations that we talked about in our webinar yesterday. The IFR did say that the SBA will be issuing additional guidelines as it relates to forgiveness. So we'll wait and see what those are going to look like. The guess is there actually will be a form, not unlike the application form. There's going to be a form that they'll put together in the next, I'm guessing, week or so, and you'll use that form to submit to your bank to request forgiveness. Obviously, you won't be able to complete it until 8 weeks after your loan has been received, but there's going to be some type of form you'll have to submit to the bank that the bank in turn will confirm and verify and then submit to the government, so that the bank will get a check paying down that loan for the forgivable portion. Number 10, there was no help on the 100%, the $100,000 cap on compensation. We've talked with bunches of people on this. We don't
even agree on it.
Tom and I don't necessarily agree on this. I happen to believe that the way the rule's written now, and what's in the IFR now, says that you have to cap compensation at 100,000, but it does not say specifically that you have to cap the benefits, the health insurance and other benefits, and the retirement plan contributions for an all-inclusive $100,000. We're taking the position, or I should say maybe I'm taking the position, that you can have $100,000 of compensation plus 100% of whatever their benefits and retirement contributions are for that employee whose compensation is over $100,000. I mentioned 3 pages in the IFR, pages 8, 10, and 11. All 3 of those pages talk about covered payroll cost, what is compensation, which items are excluded from payroll. And to me, it appears pretty clear that the $100,000 cap is on salary or on compensation. And again, we hope to get clarification on this. We hope the government will come out and just flat say, you make it real clear that it's either it's 100,000 all in for any employee, or that it's 100,000 plus, or some combination thereof. So we're waiting to see on that. Tom, I know you had something to say on it.
Okay. Oh yeah. So they're interchanging to a certain extent compensation and payroll costs, and they include under the definition of payroll costs compensation. Now, as they walk through compensation, then they come down and they're using semicolons, which you would think delineates, what's available. But when they're talking about aggregate your payroll costs, and that's where the rub comes in, because that includes under their definition, all of your insurance premiums, your retirement plan contributions, and like Randy said, this has been all over the board. I've been on the phone with some colleagues of mine up in New York City with Donald Trump's accounting firm, and their idea is this says that compensation, you get to add insurance costs to it, but not retirement. As he and I were emailing back and forth, the bank that I said yesterday was going crazy sent me an email, because I have a bunch of clients with that bank, and they said, we're in a conference right now, and not only is it capped at 100, but it includes everything. And I was telling Randy, I was on the phone with one of our attorneys that's a litigator, very experienced, and I had her read it, and she went back and forth 3 or 4 times between, was it included, was it not included, and her final comment was, boy, this is terribly written. I could decisively argue it either way, but it's crappy writing. So, and everybody is seeing it differently. Like I said, Randy and I, we look at things and we don't always agree, but most of the time we do. And we're still kind of beating our heads in trying to figure it out. But, like I said, everybody is reading it. And the bank took me to this same section F that Randy was pointing to on page 10. We're looking at the same paragraph, and everybody's coming away with a different idea.
Yeah, the key to me in that study is really page 11 of the act, because that's where it talks about what's excluded, what's expressly excluded is the terminology. It's a Q&A in the IFR, and it says what's expressly excluded, and what item 2I says, II says the compensation of an individual employee in excess of an annual salary of 100,000. So again, poorly written. My guess is we'll get clarification on this. And one of the reasons I think we will is because it really gives a small business person who has funds a real opportunity to sort of play with the system. If you had the ability to make a large profit sharing contribution and you were a solo one employee shop, and you could go ahead and front load your retirement plan with a $50,000 contribution in that 8-week period, hey, guess what? You're gonna be fully forgiven. Otherwise, you may not have been. So my guess is we'll get a direct clarification on this before the applications can be submitted. So don't put anything in ink just yet.
However, at the same time that we're talking about this, we're talking about, yes, in fact, it is a first come, first served thing. So everybody wants to get their applications in, and the idea is what to do. So, now you have the problem that we face all the time, people saying, I want to be first in line. The attorney that I was talking to, her final comment was, you know what, that's not much money to us. Let's be conservative, not include any of the insurance or retirement plan on the people that it'll affect with the 100,000, and go, because at least that way, the application that we file, they can't, bump it out because we were too liberal. So if you want to have your thing first in line, you might take a more conservative approach like that. Like Randy said, in some places, it's a significant number to our firm, because we do have a good deal of benefits and we contribute to 401k and profit sharing. So there's, it adds up to a lot of money. It's a conundrum.
It is a conundrum.
I did get that out.
It is a conundrum. The key, I think, is going to be if they don't change it, it's probably going to be more of an issue at your banker level than it is going to be at the government level, because the government's going to take the number on your application that the bank has verified and approved. So if there's a way to discern from your bank what their reading is of that, that would probably be very helpful. The only other thing I was going to mention is one of the things that came out in the IFR that was not in the initial document was that one of the expenses that they're going to allow you when you go to determine forgiveness is interest on other debt. Initially, it was just interest on mortgage debt.
Mortgage, correct.
And yep, some sort of real estate guaranteed debt or rent. And now they've added to that interest on any debt had to be incurred before February 15th of 2020. So folks that have debt on the vehicles or equipment or whatever else, lines of credit, that interest will be counted when you go to do your forgiveness calculation. Tom, any other things in the changes that we haven't hit on that are important?
Not that I can see. I mean, that number 10 is just such a big one.
Yep.
That there are a bunch of them, and I'm hoping that they don't come out with another thing tonight, because that was some late night reading last night, and we were already beat from
4 days of
banks and attorneys and clients yesterday.
Well, I would, one of the things that we've done over here is we've actually adjusted our spreadsheets. We have one spreadsheet that's got the 100,000 max total all in for an employee, and we have another spreadsheet that's got the 100,000 plus benefits. So it may make some sense to do two spreadsheets and have the two different numbers. And as soon as you hear from your banker or we get clarification from the government, you'll know which number to put at the top of your application. So to kind of wrap up, we thought we just, things that we're hearing from people and bankers, number one is that there are probably and for sure more changes coming. There will be additional clarifications to this document and clarifications to some of the many things we've talked about already today. There's going to be comments made on this IFR in the Federal Register over the next, I think, 2 weeks or 3 weeks, a period of time that may result in changes. So it's going to continue to be tweaked, probably even after your loan may be approved and funded. There may be tweaks on the back side as to how forgiveness is going to work. I've heard from a couple of different bankers that they are only doing these loans for their current customers. If they get through them and can do others, they will, but many banks are saying they're only going to deal with their current customers. We heard that there's a bank that's only doing these loans for their customers that actually have a current loan in place. Tom heard from a bank this morning that said they're not even using the SBA's application for PPP. They have their own application. So again, some of this is bankers.
It's everywhere. It's all over the place.
What else are you hearing, Tom? Anything else?
I mean, that's the bankers, and accountants are all over the place. Attorneys are all over the place. That, when, these are all people that are very educated and looking at the same, 150 words, and none of us can figure out what they really mean. So, if you're really interested, it's on page 10 of this IFR. Read it and you'll probably scratch your head too.
So at the end of the day, do not be surprised. In fact, be prepared for more changes. They're going to come. If you have a relationship with your bank, you definitely want to be in contact with the folks that you work with. I really in this feel sorry for the small sole proprietor who doesn't have a strong banking relationship. I fear that some of those folks who really need this money are going to have a hard time getting in line, if you will, to get funded. So it's going to be real important to have that relationship nailed down. So don't forget our website. Our website has a ton of information. I've already put out there our slides and our recordings from the first two town halls. This webinar is also being recorded, and we'll put it out on the website. It'll probably be out there later today or tomorrow, as well as the slides that go with it. But we also have a ton of information out there on our website. There's a big red stripe across the top, and it says COVID-19, learn more. There's a button to click on, and if you click on that button, you'll see just a ton of information that's been compiled there in that spot. We thank you again for being here and participating. We're ready to answer some questions. Max, looks like we got a few questions. You want to read them to us?
Sure. A couple comments submitted first that Bank of America is reporting that they've already got 60,000 applications for $6 billion. So might, again, if you wait too long, the first come, first serve you might be out in the cold.
That's a lot of 60,000 for $6 billion. That's pretty, that still leaves 344 billion.
Again, that's just Bank of America.
No, I hear you.
No,
and that's before they're allowed to be submitted.
Right. So, another suggestion is that if we as the firm do want to submit a comment letter regarding the proposed regs, that suggest that they make it like a cap the compensation at the FICA max instead of just 100,000.
I like that. And make that be an all-inclusive number?
Yes.
That would make some sense.
And also to your point about people that sole proprietors that don't have may not have a strong banking relationship, have somebody who has a coworker or a colleague who needs to get in the PPP program. But unfortunately, her bank is only helping the clients that already have a credit card or already have existing loans, as you said. This person's got neither. Do you recommend where they might go to for some help?
I don't have any good suggestions. I did get an email from a friend here recently who's on the board of a smaller bank. And I believe they have an interest in helping folks. I will check with them and see if they would be able to take on additional, non-customer type clients. I'm hopeful there's going to be a bank out there somewhere who will appeal to these folks, but at this point I haven't seen anything.
Now, with the Tuesday submission opening, can you still get in that queue before then, or?
Well, it's going to be bank dependent. If your banker will allow you to send the application to them sooner, then I would say yes. But when we say the opening up for the applications, that's really the first time the banks will have the ability to send the applications electronically to the federal government. So I think obviously it sounds like Bank of America is already receiving applications, but they can't submit them yet. But they've just received the paper forms would be my guess.
Let's see. Okay, let me get back up to the top here. Now, can you still apply for EIDL loan and the PPP?
Yes, you can. Yes, you can. And the IFR, as well as the application, has mentioned the EIDL in there. And if you, by chance, have already gotten your $10,000 advance that's forgivable, that gets added to your PPP loan. In the application, there's actually a little indication that tells you to add that too. And in the IFR, there's actually an example or two where they show a company who got the $10,000 and how they add it to their PPP loan request.
Now, similar to that, or in that vein, can you comment a little bit, because where on the form where it now says 2.5 times your monthly payroll plus the EIDL, is that strictly plus the 10,000 advance? It's subject.
Yeah, it's plus what you've received.
Okay.
Most people will have only received the $10,000 at this point.
Okay. Now, as an S corporation, does the owner count as an employee for this application still?
As long as they have W-2 compensation, yes.
And then similarly, the employees that get both a W-2 but also some 1099 payments, is the 1099 payments excluded from comp?
Yes.
Even if you're an employee?
Yes.
Yes.
And do you have any insight on the question 7 where it changed from asking if it's a U.S. citizen to asking if the principal place of work is the U.S.? Any thoughts on that?
No?
Me either. Someplace else that can raise more ambiguity.
Yes.
I think when it asks for who's eligible,
Hold
it's,
on, I've got it.
yeah, I think it's simply saying a U.S. citizen who's worked in the U.S.
Yeah, I think originally it said, are you a U.S. citizen? And now it just says, is the United States the principal place of residence of all employees?
Yeah, that's right.
I think that expands the eligibility to, again, some of our other clients who don't necessarily have a lot of U.S. citizens.
Correct.
Well, that would be like green card holders and things like that are not U.S. citizens, but
Right.
Permanent residents of the United States.
Right. I think they'd be treated like any other employee.
And then again, I think that's kind of what y'all were going back and forth about, but it says for employees over $100,000, you would totally exclude their health benefit paid by the company, possibly, depending on how you read that section of the regs?
That's the rub. We don't know. I mean, is it 100,000 plus benefits, or is it 100,000 total? That's the definition that we don't have yet. So you can take the conservative approach and cap all cost at 100, or you could take the more aggressive approach and take 100 plus benefits in retirement.
And now we got a couple of questions about owner compensation. Now, do they have any guidance for those owners that are not being paid on a W-2? And then similarly, what if the owner doesn't take a salary, just takes draws?
Well, I think the key there is going to be what type of entity structure that is. If the owner, if it's a sole proprietorship and there's no other legal structure, and their income's reported on their Schedule C, on their 1040, then it's going to be their net Schedule C income is how
that's self-employment income.
Yeah. The real key.
I think that's.
Yeah.
Go ahead.
Yeah, I would say the real key in the PPP program, they're looking for income that's subject to self-employment taxes. So if you're a S Corp shareholder who doesn't take a wage and all your income is distributions that are not subject to self-employment taxes, that's not going to help you at all in the PPP program. You would have no employee wages. You would have no income or no expenses associated with self-employment. So you would not be able to apply.
That's also an audit issue that
absolutely
with, but that's a whole nother can of worms that has nothing to do with this, but it is an area of concern, and the IRS is looking at that in people who are actively involved in a business and not taking a salary.
Yeah, if you're in a partnership and you get guaranteed payments, I mean, those would work. Those are subject to self-employment taxes. So guaranteed payments out of a partnership. If you have an LLC, you get a K-1 from it, and the income is subject to self-employment. Those would work as for an owner. But the key is for anybody to get a PPP loan, there has to be some self-employment income somewhere.
Now, you mentioned too that the updated regs include permissible interest from other obligations. What date does that interest have to be incurred on or before in order to include that in the calculation? Is that still is it paid or is it accrued?
I think that everything is tied back to that February 15th number. February 15th, 2020, the loan had to be in place by that date, or the obligation had to be in place by that date.
Right. It's on page 15 of the IFR, and it basically it reads any interest payments on any other debt obligations that were incurred before February 15th, 2020. So truck loans, equipment loans, line of credit, any other debt that the business has that result from interest that is for a loan that they got on or prior to February 15th of 2020 would qualify.
Got it. Any suggestions on the application form if there's not enough room for the dollar amount of the payroll or the loan request?
You know, that's one thing that's interesting on the new document. Some of the boxes are scalable and some of them are not. We're finding that the box that has the social security number, well, the box for the social security number isn't quite wide enough and the font isn't changing as the numbers go in there. And so it's creating some legibility issues. But hey, congratulations. If you've got one that's that big, that's pretty cool.
You better hurry because they're going to get all our money. I would say if for some reason it won't fit, just type it in or write it in. I mean, you're going to be over a paper document, so just write it down some best you can.
Let's see. Now, what about for a nonprofit that oversees by the board of directors? They don't actually have owners. Who complete the application? Would it be the board president or the executive director managing the day-to-day operations?
You know, the way the thing reads, authorized representative. So I would think any officer, director, you know, CEO, CFO, controller, treasurer, board president, I think any of those people would be considered an authorized representative of a nonprofit.
Now, what about a company that's got a cash balance retirement plan, highly compensated, with a portion that going to all employees? And you also have profit sharing. Would that all be included?
That's part of that area that we're talking about.
Right.
Depending on how you read that section on page 10, yes, it is included, or no, it's not. If they're saying that payroll costs are defined as everything and it's capped at 100, you know, only those people whose comp plus, you know, the other benefits are less than 100 would benefit from that at all. You'd have to peel out the pieces for those who are over 100.
Exactly right. I mean, it's that same issue. If everybody was under 100 and their cash balance contribution was still kept them under 100, you know, absolutely that would all be allowed. If any of that goes over 100, then you've got the issue we've been talking about that needs to be clarified as to what the max is per person.
Now, is the health insurance paid by the company for a partnership, and there's a partner that obviously not receiving a W-2, is that partner's health insurance still included for benefits cost?
I think so. I would say yes.
Oh, let's see. We have.
You know, if they're over what, a 5% owner, wouldn't it be on their K-1 anyway?
Should be.
Yeah.
So can you clarify a little bit on the application where it says the 2.5 times the monthly payroll plus the EIDL, where it says net of advance, if applicable, is equal to the loan request. So can you comment on that a little bit?
Well, my understanding there is that if you've already applied for and received an EIDL and it's been funded, then what the government wants to do is roll that EIDL loan into a PPP loan. And so you would add to the PPP request the amount you've already received from EIDL. There's some instructions in the IFR on that. They actually have some examples of how to do it, and that's I'm looking for the page number. Page 8 and 9 are a couple of different examples where it shows you how you add back the loan balances of the EIDL loan to whatever you're requesting. So it ends up being your PPP request plus your EIDL loan.
Now then, does that mean, because if the EIDL rate, we have a question, because the EIDL, is typically for a higher interest rate and a longer term. So is that going to convert to the same terms as the PPP?
Yes, I think so. Now, I don't have enough clarification on that, but there's a possibility that you may be able to keep that, because I just looked at the example, and the example only shows adding the $10,000, the advance
That's
amount.
correct.
So I think you may be able to keep everything but the 10,000 separate, and have that EIDL loan that's on the longer term and the 4% interest or whatever the interest rate is, and just have the 10,000 that's added to the PPP, because that
Yeah,
10,000 is also forgivable.
Right.
I don't think you're going to get an EIDL rolled into the 1% loan here, if that's what we're getting at. I don't think that
Right. And the
that
shorter
kind of
term.
loophole built into this.
And so if you not yet received the $10,000, you don't need to include that on this calculation either, right?
That's correct.
Yep, that's great.
And then can you just clarify that, assuming that for the forgiveness purposes, you have to show 75% of it is for payroll, but the remaining 25% could be used for interest on loans, and you still have full forgiveness?
Say that. Did you hear that? Say that
Yeah,
again.
With that, so
they're talking about the additional.
75% of that has been used on payroll expense. The remaining 25% could still be used on other interest, on other loans, and you still would get full forgiveness, right?
Yes, correct. That is correct.
Assuming that you haven't dropped anybody's payroll more than 20.
Yeah, as long as you meet those other two qualifications, that's right.
Have y'all heard of anybody who's funded yet their $10,000 advance?
I haven't.
I've been too busy to check our bank account.
Now, is the EIDL, is that also through your local bank?
No, the EIDL goes through the SBA. You apply for it online.
And let's see. I have a comment that the BBVA bank is pointing people to their online portal where they have the application to fill out online, and it's a duplicate of the SBA thing, but you can still submit it today. So sounds like you're saying that gets it into the queue.
Mm-hmm. That's great. I would do that. Get in line fast as you can.
Can you touch on again the loss of FTEs from 19 to 20 and how that would affect the loan calculation and your payroll costs, et cetera?
Sure. This is something that needs to be better clarified. But the example that we used yesterday was where your FTEs for a period that's measured from 2019 to the 8 weeks subsequent to your loan, there's a comparison. And again, I'm not going to get into the weeds because I don't really know the answer perfectly, but they're basically going to determine that if your FTEs decreased during the 19 period as compared to the 8 weeks after your loan is funded. And if your FTEs decreased, then they're going to decrease the amount of forgiveness you'll receive on your loan. So the example I used yesterday is you had 15 FTE in the period from the prior year, but you only have 10 in the 8 weeks that you received your loan, then that's going to be a 2/3 fraction that's created, and you're going to get 2/3 of your loan will be forgiven, 1/3 will not, because there's been a decrease in your FTEs. The other calculation that's going to be required, and again, there's some confusion over whether it's either or and, if it's both or it's one or the other, because the other calculation says if you decrease someone's compensation during that 8 weeks more than 25% versus the prior measurement period, then whatever that difference is also will not be forgiven. That'll come off your forgiveness. So if that number is $5,000, you pay somebody $5,000 less during that 8-week period than you would have when you were paying them a full salary previously, then $5,000 will not be forgiven. Again, we don't have the clarification on exact dates, exactly how that's going to be done. But the other key part of that is even if both of those hit you, the reduction in FTEs and the reduction in salary, if you restore them by June 30th, which apparently means just putting them back on the payroll at a salary that's equal to what it used to be, those two go away and you still get full forgiveness. So again, that's part of the convoluted piece of this and some of the clarification, and we need examples on that. We haven't been given any examples on how that works.
Let's see, what is the baseline period in 2019? And I think that's one of the updates, right? Is it exact dates or is it the entire
It was
year? And I think
March 1st to June 30th.
And the dates in the act yesterday were February 15th through June 30th.
Ah, you know what? I missed
I
that.
went back and looked at it. It was February 15th through June 30th. So I'm not,
I don't know.
I don't know if that's going to change. I don't know if they're going to make that a easier period to measure. We need more guidance on that. But that's what was in there. That was in the law yesterday. And I don't think they addressed that in the new IFR or changed it.
Let's see. I think we got through. Let's see. I think we got through all those. If there's a, if we missed anything, let us know for sure. But I think we got through. I think we got through all the comments and questions.
Excellent. Well, good. Well, we hope you guys all have a great weekend. We are hopeful no more significant changes happen except for the 2 or 3 things we're looking for. We will continue to update you via email. We're finally getting the hang of the technology. We may just do a webinar every day. We were joking.
We will.
Maybe we're going to go. Maybe Netflix will pick up our series, and we'll go big time. But anyway, we appreciate you guys attending. We're here for you. You have any questions or anything at all that you need, feel free to give us a call, shoot us an email, and we'll be happy to get back to you. All the best and have a great weekend.
Yep. Thanks for joining us.